Long and especially today also comes from GTRI, which says that India has 18 FTAs, but the India-US trade deal is still far from fruition. GTRI warns of a tough trade year 2026 coming up. Also on the show, we discuss Donald Trump says happy Merry Christmas to everyone, including dead terrorists. This after the US confirmed strikes on Nigeria's ISIS proxies. Also on the show, we will discuss, as 2025 comes to an end, has it been the year of IPOs, or is 2026 with big ticket IPOs slated for listing going to beat 2025? All this and more on this show. You're watching Morning Brief at 9. Morning Brief at 9. First up, let's bring you all the headlines we are tracking for you this Friday morning. China accuses the United States of distorting its defense policy as China-India border disagreement shows sign of easing tensions. GTRI urges India to shift focus from signing new FTAs to ensuring export gains as rising trade barriers, US tariffs and EU carbon rules challenge growth. Meanwhile, Russian spirits exports to India quadruple in first 10 months of 2025, with vodka driving fastest growth among emerging markets. Indigo cancelled 67 flights across multiple airports due to forecasted bad weather amid winter fog season, adding to the airline's ongoing operational challenges and regulatory scrutiny. Atal canteens launched across Delhi on former Prime Minister Atal Bihari Vajpayee's birth anniversary, offering nutritious meals at just 5 rupees to over 1 lakh people daily. US President Donald Trump says American forces carried out airstrikes against the Islamic State in northwest Nigeria, accusing the group of targeting Christian communities in the region. Shares of packaged food makers and fast food chains slide after US regulators approve Novo Nordisk Wegovy pill, raising fears of changing consumer habits and product overhauls. China condemns America's latest $11 billion weapons package for Taiwan, warning the deal accelerates tension and raises the risk of conflict in the Taiwan Strait. And Japan signs off its largest ever budget worth $782 billion to fund higher defense spending and rising social security costs as inflation continues to strain public finances. The top story this morning: China on Thursday accused the United States of misrepresenting Beijing's defense policy in an effort to obstruct any improvement in ties between China and India. Now, the remarks were made by Chinese Foreign Ministry spokesperson Lin Jian during a regular press briefing. Responding to a question on whether China could use the recent easing of border tensions with India to prevent closer ties between Washington and New Delhi, Lin said that Beijing views its relationship with India from a strategic and long-term perspective. He emphasized that the border issue is strictly a matter between China and India, adding that China objects to any country passing judgment on the issue. Now, the comments follow a report by the US Department of Defense, which said China was likely to use the de-escalation of tensions along the line of actual control to stabilize relations with India and prevent deeper US-India ties. The assessment was included in the department's annual report to Congress titled Military and Security Developments Involving the People's Republic of China 2025. This report was released on Tuesday. According to the report, Indian leaders announced an agreement with China in October 2024 aimed at disengaging from remaining standoff points along the disputed border. The announcement came just 2 days before a meeting between Chinese President Xi Jinping and Prime Minister Narendra Modi on the sidelines of the BRICS summit. The exports of Russian spirits to India have nearly quadrupled in the first 10 months of 2025 compared to the same period last year, making India an increasingly attractive market for Russian producers. According to data from the Russian Ministry of Agriculture's Federal Center for Agriculture Export Development, Russian exporters shipped around 520 tons of spirits, including vodka, gin, whiskey and liqueurs to India, valued at approximately $900,000. Now, that's 3 times higher in weight and 4 times higher in value from last year. Now, vodka remains the main driver, accounting for roughly $760,000 of shipments. Now, although India ranks 14th among the largest importers of Russian spirits, with just over 1% of total volume and revenue, the growth rate for exports to the country is the highest among all markets. Other major buyers include Kazakhstan, Georgia, China, Azerbaijan, Armenia and Belarus. And news from the Indian skies now. Indigo cancelled 67 flights across multiple airports on Thursday, citing forecasted bad weather and limited operational reasons. Now, data from the airline's website shows that only 4 of the cancellations were due to operational issues, with the majority linked to anticipated adverse weather. Airports affected included Agartala, Chandigarh, Dehradun, Varanasi and Bengaluru, among others. The disruptions come during the aviation regulators' officially declared fog season, which runs from December 10th to February 10th. Now, during this period, low visibility routinely challenges flight operations, and airlines are required to deploy pilots trained on Cat 3B operations and use aircraft equipped with Cat 3 landing systems. Indigo's latest cancellations add to the turbulent winter for the airline, which remain under the DGCA monitoring following large-scale flight disruptions earlier this month that left thousands, if not lakhs, of passengers stranded across the country. Well, the Delhi High Court is set to hear the matter related to the air pollution in the national capital today. A bench comprising Chief Justice Devendra Kumar Upadhyay and Justice Tushar Rao Gadela has listed the case for hearing today. Now, earlier, the court dictated the authorities to inform it of when the GST Council would meet to decide on granting tax relief for air purifiers. In its directions, the High Court asked the GST Council to convene at the earliest and consider lowering or even abolishing GST on air purifiers as Delhi continues to grapple with hazardous air quality. At present, air purifiers attract 18% GST. In strong remarks on the worsening pollution crisis, the Delhi High Court had earlier told the Delhi government either provide clean air or slash GST on air purifiers. Now, Atal canteens were inaugurated across Delhi on Thursday to mark the 101st birth anniversary of former Prime Minister Atal Bihari Vajpayee, offering nutritious meals at just 5 rupees. The initiative is aimed at providing affordable food to workers, the poor and other needy residents of the national capital. The government has allocated over 104 crore rupees for the operation and management of the scheme. Each Atal canteen will serve nearly 1,000 meals a day, benefiting more than 1 lakh people daily across Delhi. Union Minister for Power and Housing and Urban Affairs Manohar Lal Khattar, along with Delhi Chief Minister Rekha Gupta, inaugurated an Atal canteen near Apna Bazaar in Lajpat Nagar. The Chief Minister, along with ministers and dignitaries, also shared a meal at the canteen and instructed officials to maintain the highest standards of food quality and hygiene. Now, speaking at the event, Khattar said the initiative reflects Atal Bihari Vajpayee's ideals of service, good governance and human sensitivity. He added that the scheme is a strong commitment to last-mile welfare and aligns with Prime Minister Modi's vision of ensuring that no one in Delhi goes hungry. All right, in corporate news, Samsung Electronics has ruled out listing its India business for now, choosing instead to focus on artificial intelligence-led growth and expanding its consumer finance operations in one of its most important markets. In an interview, JB Park, President and CEO of Samsung Southwest Asia, said the company is prioritizing deeper manufacturing investments in India and has applied under the Production-Linked Initiative scheme to manufacture mobile phone display locally. Now, Samsung already operates its largest smartphone manufacturing facility globally in Noida, which has emerged as a major export hub. Now, responding to questions on a potential IPO, Park made it clear that Samsung has no such plans at present, even as peers like Hyundai Motor India and LG Electronics have eyed the public markets and listed on the Indian stock exchanges. He said the company prefers internal growth backed by adequate funding through alternative capital options such as institutional borrowings and corporate bonds. Another policy news this morning. India has signed as many as 18 free trade agreements or comprehensive economic partnership agreements so far. But a new report by the Global Trade Research Initiative, or GTRI, is urging a shift in focus from signing new deals to making existing agreements deliver real export gains. The think tank says this is especially critical for sectors such as electronics, engineering and textiles. According to the GTRI report, India's total exports stood at about $825 billion in FY25 and are expected to rise only marginally to around $850 billion in FY26, reflecting a difficult global trade environment. Merchandise exports are likely to remain flat due to weak global demand and rising trade restrictions, while services exports are expected to cross $400 billion, providing the main support to overall trade. Now, GTRI warns that India is entering 2026 amid one of the toughest global trade frameworks in years. Rising trade restrictions, slowing demand and new trade barriers are putting pressure on India's export growth. Remember, the United States has emerged as a key pressure point. Under President Donald Trump, steep unilateral tariffs have hit Indian exports, which fell about 21% between May and November of this year. Meanwhile, Europe presents another challenge with the EU's Carbon Border Adjustment Mechanism, or CBAM, set to begin in 2026, already impacting India's steel exports. Staying with free trade agreements, remember, India and New Zealand have just concluded an FTA in record time, restarting talks after a decade-long pause and sealing the deal in just 9 months. The pact goes well beyond tariff cuts, focusing on services, skill mobility, student opportunities and long-term investments, reflecting India's evolving trade strategy. News 9's Krishna Kumar has more on this.
India and New Zealand concluded a free trade agreement on the 22nd of December, a deal both sides are calling historic, not just for what it covers, but for how quickly it came together. After nearly a decade-long pause, negotiations resumed in the month of March this year, and in just 9 months, the two countries sealed an agreement aimed at deepening economic ties, opening up markets, and reshaping how businesses, professionals and students move between these two nations. India's Prime Minister Narendra Modi and New Zealand's Prime Minister Christopher Luxon announced the breakthrough after a telephonic conversation, calling the pact mutually beneficial and reflective of strong political will. Remember, talks were formally launched during New Zealand's Prime Minister Christopher Luxon's visit to India in the month of March this year, and officials say that the agreement is likely to be signed within 3 months, with implementation expected next year. So what does this deal actually do? For New Zealand, the big takeaway is deeper access to India's massive consumer market, the world's largest population and an economy projected to touch $7 trillion by the year 2030. Under the agreement, tariffs will be reduced or eliminated on about 95% of New Zealand's exports to India, with more than half of them becoming duty-free from day one. Prime Minister Luxon says the deal could add $1.1 to $1.3 billion a year to New Zealand's exports over the next 2 decades, particularly in dairy, fresh fruits, wool and wine. For India, the gains are less about milk, and more about mobility and services. This FTA places a strong emphasis on services trade, a core strength of India's economy. New Zealand has offered its most ambitious services package ever, covering 118 service sectors and MFN, or most favoured nation treatment, across 139 subsectors including IT, education, telecom, tourism, construction and professional services. The agreement also includes major mobility provisions. Indian students will get post-study work visas of up to 3 years for STEM graduates and 4 years for PhD scholars with no numerical caps. A new temporary employment pathway allows 5,000 Indian professionals annually, along with 1,000 working holiday visas every year. In short, this deal is not just about goods crossing borders, it's about skills, services and people. Now, beyond tariffs, the India-New Zealand Free Trade Agreement opens up several new growth avenues. New Zealand has committed to facilitate investments worth $20 billion into India over the next 15 years, a move expected to support manufacturing, agriculture and allied sectors. In agriculture, New Zealand will help set up centres of excellence for apples, kiwi fruit and honey, aimed at improving productivity, technology adoption and farmer incomes. For India's manufacturing sector, this deal brings duty-free access to key raw materials like wooden logs, coking coal and metal waste and scrap, helping reduce input costs and improve competitiveness. The agreement also widens cooperation in areas ranging from fisheries, culture and forestry to audio-visual tourism, horticulture and traditional knowledge systems. Crucially, the free trade agreement goes beyond the tariff cuts with provisions to address non-tariff barriers through stronger regulatory cooperation. Remember, bilateral merchandise trade touched $1.3 billion in the financial year 2024-25, while total trade in goods and services stood at around $2.4 billion, with services alone contributing $1.24 billion, highlighting why services and investment are central to this pact. However, the India-New Zealand Pact must be seen in a wider context, as it is one link in a chain of trade agreements that India has concluded in the recent years to expand market access, boost services exports, and secure a stronger position in global supply chains. It is India's third major trade agreement concluded this year and part of a much larger trade push under the Modi government. Let's now look at these trade agreements to see how India's trade map has steadily evolved over the years. In the year 2021, it was the India-Mauritius CECPA. India's modern FTA journey began in February 2021 with the India-Mauritius Comprehensive Economic Cooperation and Partnership Agreement, India's first trade pact with an African nation. This was a limited but strategic deal covering goods, services, rules of origin, mobility and financial services. India gained preferential access for over 300 export items, while Mauritius secured access for over 600 products into India. Crucially, Indian service providers gained access to over 100 subsectors spanning IT, finance, education, healthcare, tourism and professional services, a clear early signal of India's services-first approach. In February 2022, India signed the UAE CEPA, its first major trade agreement in a decade. Tariffs were eliminated on over 97% of Indian exports, benefiting gems in jewelry, textiles, pharmaceuticals, leather and auto components. Trade surged, nearly doubling to over $83.5 billion by financial year 2024. The UAE deal became a template, fast, deep and focused on trade plus services. Later that year, in December 2022, India signed the Economic Cooperation and Trade Agreement with Australia. This deal aligned two natural partners, Australia's minerals and agriculture, with India's services and manufacturing strength. It also strengthened mobility, diaspora ties, and Indo-Pacific strategic cooperation. In 2024-25, the EFTA, a European breakthrough. In March 2024, India signed the Trade and Economic Partnership Agreement with EFTA nations, Switzerland, Norway, Iceland, and Liechtenstein. The deal came into force in October 2025 and marked India's first free trade agreement with developed European economies. EFTA nations committed $100 billion in investment and 1 million direct jobs over 15 years, the first binding investment pledge in any Indian free trade agreement. Services exports gained through digital trade, professional mobility, and mutual recognition of qualifications. In July 2025, India and the UK signed the Comprehensive Economic and Trade Agreement. The UK granted duty-free access to 99% of Indian exports, including labor-intensive sectors like textiles, leather, gems, and toys, a major win for medium and small enterprises and job creation in India. Services were front and center again. Indian exports of services to the UK already stood at nearly $20 billion, and CETA eased mobility for IT professionals, healthcare workers, educators, and finance experts. One major gain is the Double Contribution Convention, which means Indian firms and workers will save over 4,000 crore rupees by avoiding double social security payments. Now, just days ago, on the 18th of December, India signed a CEPA with Oman. Oman granted duty-free access on over 98% of tariff lines, covering nearly all Indian exports. India liberalized tariffs on about 78% of its imports from Oman. Beyond goods, the deal boosts services and labor mobility, strengthening India's footprint in the Gulf. So, what does all of this mean? Well, when you look at these deals together, a clear pattern emerges. India is no longer signing trade agreements just to cut import duties. The focus is now on services, skilled mobility, jobs, investment commitments, global supply chain integration. The India-New Zealand Free Trade Agreement fits squarely into this strategy. Smaller in trade volumes, but high impact in people-to-people and service linkages. As talks continue with the US and the European Union, India's message is consistent. Trade deals are no longer transactional, they are strategic. And with 7 major free trade agreements concluded in just a few years, India is steadily rewriting its role in the global trade order, not as a passive market, but as a country that helps set the terms of engagement.
And if you thought that 2025 was a year of IPOs, especially the startup IPOs from Grow to Lenskart and Meesho, beware, 2026 could very well pip 2025 as a year of IPOs, with large ticket IPOs including Reliance, Jio and the National Stock Exchange, plus Flipkart and PhonePe all set for listing next year. We'll get Kranti Batini on the show to tell us what your IPO strategy for 2026 should be after this short break.
"2026, take notes. Manifesting. For my little Miss Sunshine, tickles and giggles. Also wanna be a biker chick this time. And dear 2026, only love for my people and myself. To manifest my best life, nature's cosmic energy.
Now mine, natural diamond intention pendants.
हर स्वाद में बस सा हर दाद में बसा ये मेरा चीज है
50 सालों से जो बना इस देश की शान वो है अमूल चीज।
A resurgent India is racing towards the Viksit Bharat goal, braving global economic headwinds. Bulletproofing our economy from these uncertainties are Bharat's homegrown businesses. Powered by tech-led innovation, Indian entrepreneurs are truly scaling up, riding the next wave of disruption with AI and cloud to break into the big global league. TV9 Network in association with SAP presents Visionaries of Viksit Bharat, a series celebrating inspirational business leaders shaping tomorrow. Watch them take an iconic leap at Visionaries of Viksit Bharat conclaves. Exclusively on News 9.
Welcome back. You're watching Morning Brief at 9 right here on News 9. Let's get a quick check into stock markets as they've opened weaker this morning. Expectedly, there was absolutely no movement on markets yesterday, being Christmas, with the US, all of Europe, most of Asia, including India, celebrating Christmas and the market holiday. But this morning, things not looking very pretty for the Indian markets. Remember, on Wednesday as well, the Indian markets had ended their 3-day winning streak. And this morning, again, massive cuts seen, especially in the large cap stocks. So you're seeing Nifty 50 and Sensex, now they had opened much weaker, now a little bit still in the red, but some improvement in the first 10 minutes or so of trade. But as things stand, Nifty 50 holding comfortably above the 26,100 odd levels, and the Sensex well above the 85,000 odd levels this morning. Meanwhile, you've got the mid cap and the small cap registering some gains in trade this morning. In fact, the broader markets, which are the small caps and the mid caps, performing much better than the large caps and the benchmark Sensex and Nifty. Volatility in the Indian market is extremely low. In fact, it's up about 1%, but still well below the 10 levels, also at just about 9.28. This means no major swings in the market seen this morning, and no major swings expected in the next few trading hours as well. Let's pull up the Nifty 50 heat map and try to make sense of which are the companies which are leading the cuts this morning. Well, the IT pack is under some pressure. TCS is down about 0.25 percentage point, and Wipro is also down about 0.15% or so. Reliance Industries had opened weaker but has recovered in the last 10 minutes or so. The stock trading absolutely flat this morning. Meanwhile, in the energy pack, Coal India registering massive gains, up about 1% or so in trade. Well, in the consumer durable space, there's a mixed bag. Maruti Suzuki marginally down, M&M marginally up. Titan is up almost 0.6% or so. Meanwhile, the banking and financial industries sector is still reeling under some pressure. You're seeing ICICI Bank and HDFC Bank both showing some cuts in trade this morning. Well, 2025 has also been the year of IPOs, and we have Kranti Bhatini who's joining us this morning to help us understand what the IPO story for 2025 has been and what should traders and investors expect in the IPO season going ahead. Kranti, good morning. Thank you so much for joining us, and I really want to focus not too much on the regular movements of the stock market today, but really the big hitters of 2025, as well as the startups that continue to shine on the stock exchanges across the later part of 2025. So first up, let's just talk about the massive listings that we saw this year, the year gone by, before we come to what is expected in 2026. Your quick views on the big ones: the Tata Capital listing on 13th of October and the market cap now well over 1.4 lakh crore rupees, followed by HDB Financial Services, LG Electronics, and of course ICICI Prudential AMC.
Karthik, good morning to you. You rightly mentioned this year has been a year of IPOs. We have witnessed big bang listings, and most of the action has been in the primary market this year. And the promoters at the right time, they could able to move their chips and they could able to sell the stakes at a very good valuations at this point of time. These are the decent companies, strong business models, and they are expected to derive revenues in the coming years and quarters also. So by and large, for any fresh investors, what we are witnessing is for the IPO season is concerned, it can be any IPO, but at the time of listing, the fringiness and also the euphoria and exuberance was there for a week. Post 15 days of listing, what we witnessed in majority of these IPOs, they have been sliding back again. But exception to LG, it had a lukewarm listing. LG had a strong listing. Sorry, pardon me.
Yeah.
Okay, Hyundai had a lukewarm listing and it's recovered very well.
Right.
Coming back to LG, it had a strong listing. From there onwards, the stocks have been consolidating. So there is a mixed bag. Some stocks are coming with a lukewarm listing and gradually recovering. And majority of the stocks, they are having a big bang listing, and from there onwards, the euphoria is getting fizzled out over a period of time. But from there onwards, what drives these stock prices is earnings. If they could able to meet the expectation of earnings of the investor expectation and street expectation, we are witnessing some kind of a rallies in these stocks. By and large, these are all decent companies, Karthik. But for investors, how much price I am paying for these growth and these good companies, that is extremely crucial for the investors. That can be addressed over a period of time, taking into consideration of at least 3-4 quarters results into cognizance.
All right, 3 to 4 quarters of results are going to be critical to estimate what the long-term potential as far as the stock price of these companies goes. But it's not just the big companies. In fact, the last 2 months of 2025 saw the startups shine at the Lal Street as well. To begin with, we had Lenskart, which listed on the 10th of November and touched that market cap, which many at that time thought was unimaginable, of 78,000 crore rupees, followed 2 days later by Grow, which listed on November 12th and exceeded the market cap of 1 lakh crore rupees. In other IPOs from startups, we had Physics Wallas, which listed on November 18th and got a market cap of about 37,800 odd crore rupees. But the bumper listing really came much more recently with Meesho. Remember, the stock listed on December 10th and has done extremely well in the last 10 to 12 trading sessions and has touched a market cap of about 88,000, 89,000 crore rupees or so. So, Kranti, I want to understand, is the formula for judging the success of an IPO the same for startups as it is for the large cap listed companies? Or are there other functions also like brand building, customer acquisition, which go in addition to potentially just revenue and profitability for startups?
Interesting question, Karthik. Okay, if there is the formula is same, then the investing can be very easy. You and me can go and implement the formula. But it's not as easy as we can discuss. Karthik, there are multiple too many moving parts and factors have been influencing these stock prices. But by and large, to make any serious investments in these companies, I'm not in a hurry to make any kind of putting my money or our investors' money at this point of time, okay, jumping into these companies. I'll wait for a couple of quarters. I might miss the rally at this point of time. We are ready. But as the greater clarity emerges, we can take a call on any kind of a serious investing is concerned.
Okay.
By and large, these companies, Karthik, they have started adding one tag for their business models. Right now, Lenskart, when it got listed, they mentioned everybody thought a chashma banane wala hai. But they are themselves portraying as a technology company in the eyewear
Right.
is concerned.
Right.
So everybody started adding the technology driven tag for their business models. So how far, okay, these kind of tags would be yielding the results, that is extremely crucial. So I folded my hands to look at these companies' earnings in the next couple of quarters, at least 2 to 3 quarters earnings, how they are going to be, is the crux for making any kind of a serious investment decision while investing. We can make some listing gains, but to put some kind of a serious investment for these companies is concerned. Just wait for some more time, and how the results are going to sustain, that is extremely crucial.
One follow-up question on that is the fact that you also have these global brokerages which sometimes give the buy calls or the sell calls, and especially on these headline-grabbing companies. Like recently, there has been a buy call on Lenskart. Now, what do you make of that, given the fact that it hasn't even completed 1 quarter yet ever since it has been listed? So, some people would potentially look at those global brokerage calls very seriously and park some money. While I understand FIIs and DIIs could potentially look at those brokerage calls seriously, do you think retail investors should pay any heed to such calls?
Interesting, Karthik. But Karthik, I just want to take one example. Look at Baizu. The investors are not small retail investors. Okay, the investors are very learned, Harvard scholars, and who understand the balance sheets very well. But they lost their money, tons of money. So whether we have to hearken to the voice of these global brokerage companies, sometimes yes, but not every time yes.
That was the story for 2025. Let's move now to 2026, and there are some big ticket IPOs slated for 2026 as well. Let's begin, of course, with the biggest of them all, Reliance Jio. Now, again, we saw JFS pretty much de-merge from Reliance Industries in 2023, if I'm not mistaken, Kranti. And now you're looking at a Reliance Jio, the telecom arm, potentially delisting, and there could be a sort of demerging, and there could be a potential listing of Reliance Jio. Now, estimated valuation of 12 lakh crore rupees. We don't know the timelines and when the red herring perspective will be filed, but is this an IPO that one would have to watch very, very closely and make very, very calculated decisions on?
Yes, Karthik, it's going to be one of the bigger listing. The street has been waiting, and many companies have already infused during the lockdown season into Jio. But Jio, as we mention, always telecom company, but the management always says it's a technology-driven company. So as I mentioned to you, the technology tag is getting added to every new IPO listing at this point of time. We need to see it's a strong business model, and they have a strong reach, and the way they disrupted the telecom services in the recent years, we witnessed the way they have penetrated the investor base and also increased their ARPU. It's a long game for Jio is concerned. So one need to wait how things are going to pan out. Karthik, it is on a lighter note. These names looks very exciting. Okay, this is just like love before marriage. Post listing,
Right.
the earnings drives, and we all know how many cases the love is going to be retained. Okay, always stock markets, the love in stock market is earnings. So how these companies' earnings are going to go up, that is extremely crucial.
Right, but for Reliance Jio, is the love affair likely to last longer, Kranti, simply because we know that this is the largest telecom operator in the country. We know the kind of ARPUs that Airtel has been trying to fight over, and Airtel in the Nifty 50 pack at least, in fact, the entire telecom market, which is now pretty much a duopoly with Airtel and Jio. We know for a fact that Reliance Jio, when it comes out with its own IPO, is not going to be under any sort of cash crunch, or there could be any big question marks on growth. So with that little caveat in mind, would you say that Reliance Jio is definitely an IPO that people should park some money in and try to sort of subscribe to it and get allotted?
Yeah, we can't ignore it's extremely crucial, but we need to see the pricing and the pricing of the IPO, how it's going to be. So final blueprint will take one can take a decision, but
Right.
definitely it is a much sought IPO in India.
All right, a much sought after IPO in India. Moving now sequentially again, valuation wise, the next big one which is likely to come out next year is Flipkart, with an estimated valuation of 7 lakh crore rupees. Remember, Flipkart was bought over by Walmart, and then it also changed its domicile from Singapore back to India to specifically list on the Indian stock markets. Estimated valuation of 7 lakh crore rupees. Flipkart, would that be on your radar, given that we don't really have, apart from Meesho, we don't really now have a pure play e-commerce listed company on the Indian markets. Quick commerce, of course, is a separate category, and we will come to quick commerce as well. But Flipkart, with its market penetration, with its order value and volume pretty much almost twice that of Amazon, is this going to be a serious bet for you, Kranti?
Definitely, Karthik. These are the new age business models. They disrupted the way how things goes, and they changed the lifestyle of the investors, lifestyle of the consumers, and their vendors are concerned. So definitely, these are the much sought IPOs. The names you are mentioning rightly, but what price we are going to buy this growth? And the growth is immense, but how much price I am paying for this growth is extremely crucial for these companies while taking any kind of a serious investment decisions.
Right. So price, the listing price band is going to be critical to evaluate Flipkart. Would you sort of use the same barometer for Zepto as well? Because this space, the quick commerce space, has a lot more competition when it comes to listed entities and a lot more to understand in terms of historical valuations of both Swiggy and Zomato, now called Eternal. And both there on Swiggy Instamart and Eternal's Blinkit competing directly with Zepto. Zepto comes out of nowhere, 2020, sort of milks the pandemic and introduces this 10-minute quick commerce formula, and everybody starts following. And now it follows the sort of bigger daddies when it comes to the quick commerce space and is looking at a potential listing in 2026, again $7 billion valuation. Is Zepto going to pretty much do for investors what Eternal has done and what potentially Swiggy has not as successfully done for investors so far?
Absolutely, Karthik. 7 billion valuations. Look at the way things are emerging in India. Earlier, it used to take decades to get a market cap of 1 billion. Now, it is just tip of the iceberg at this point of time, getting these kind of valuations. These are strong business models, Karthik. No doubt, absolutely. They created their mark in the marketplace at this point of time. It became a household brand, and it have penetration to get into tier 1, tier 2 cities is concerned. Their coverage, wide coverage has been going up. They restricted to metros. Now they are getting into much smaller cities. There is a long way to go for these companies. But Karthik, the way for these companies is the technology, and the entry levels for these companies are extremely crucial. Tomorrow, if somebody is disrupting their business model, that's where the risk lies for these companies. They disrupted one business model and someone will come and try to disrupt their business model. So these are the associated risks for these companies. At this stage itself, there are a lot of big HNI investors have been betting on these companies. They infused millions of dollars into these companies. So we need to wait and watch how things are going to evolve. But much exciting times are definitely ahead for the market.
Absolutely. And talking about those exciting times, we are only halfway into our list for 2026. There's also the big one, National Stock Exchange, Kranti. This is something closer to you, I believe. And NSE, given the fact that 2025 has pretty much been a flat market, volatility is low, which means traders are pretty much still sitting on the fence. Not as much trading volume, trading value being exchanged on exchanges. So lukewarm estimations if this environment continues, or would you be bullish on NSE coming up with its own IPO?
We're also just waiting, crossed our fingers, because many of the investors have invested in NSE in the unlisted space is concerned. Strong cash cow, and it is the much sort of IPO for me. And we expect the trading volumes to go up on a longer term basis. What we witnessed, the current penetration of equity market is just the beginning of New India. There is a long way to go. Definitely, this is the stock, this is the company to look for long term.
All right, 2 more to go, Kranti. I want to now switch focus to PhonePe, a pure play UPI-enabled phone wallet application owned by Flipkart, which is owned by Walmart, and now again repatriated back to India. Estimated valuation of 1.3 lakh crore rupees. Well, compared to the rest of the IPOs, it seems like a small valuation, but still a more than a unicorn. In fact, 30% more than a unicorn. But we saw the story with Paytm go a little sour with investors, and in this digital payments ecosystem, there isn't really any other listed company. So what are the parameters that one should keep in mind while placing bets for or against PhonePe?
Karthik, you rightly mentioned, we don't find any smartphone without PhonePe or Paytm. But the way deriving the revenues. Okay, right now, it is a complementary for every investor. You can transfer the money at just with nanoseconds and using their services. The minute they try to charge anything with the payment system is concerned, that's where the investor key concern, and somewhere the other platform dominates. That is the issue with Paytm or PhonePe. So how they bring that customer loyalty while charging some kind of a fee, that is extremely crucial for these business models. So this is one of the interesting IPO to look after in the coming days.
We will leave it at that as far as IPOs go, but the big ticket question on everybody's mind is that even though Sensex and Nifty did briefly flirt with lifetime high levels in the first half, in fact in the first few days of December, we've pretty much sank from that once again. Now, one wants to understand 2026, start of 2026, three primary headline events that one can potentially look forward to. First is going to be Q3 earnings, second is going to be the union budget, and third, and a big question mark on that, which we discuss without fail every time that we are here, is the India-US trade deal. So apart from these three main headline events for Q4, are there any other events that are on your radar to estimate which direction the markets are likely to take at the start of 2026?
One thing, Karthik, we have a strong domestic liquidity that has been keeping the markets to sustain the range of 26,000 level. So as long as this liquidity is quite strong, and if we are holding this level, markets are expected to do well in the coming year 2026. And we are also waiting for the exodus of foreign portfolio investors when they are going to allocate funds towards India. Because we had a decent consolidation and the margin of safety in the market is comparatively high as on today. So that's where the real catch is going to be. As long as the domestic liquidity is strong, Indian markets are going to thrive in the coming quarters also. But any dent towards the domestic liquidity, that is the key area one need to keep on watching. But by and large, the domestic liquidity is quite strong. Is there any other asset class that's going to take away that money promised to equity market? That's where the key concern. Last year, 25, bullion market has been the outperformer. Is the money flow is getting into the bullion market or any other asset class? That's where the key concern. As long as at this point of time, the domestic liquidity is strong, as long as that is strong, markets are expected to do well. And as you rightly mentioned, the Q3 earnings are crucial.
All right, Kranti, we will obviously keep an eye on those Q3 earnings and, of course, on the budget and the long-awaited India-US trade deal. It looks like Donald Trump is going to complete 1 year in office for the second time before the India-US trade deal comes to any fruition. But for this year, perhaps, let's leave it at that, Kranti. Thank you so much for your time, and we'll continue to have you with us all through 2026 as well. And with that, we will slip into another very short break, but a lot more coming up from across the world on the other side of the break. You're watching Morning Brief at 9 right here on News 9.
पेंटिंग में पहली बार बिरला ओपस एश्योरेंस। 1 साल में पेंट को कुछ भी हुआ तो पेंटिंग वापस करके देंगे। रजिस्टर करो birlaopus.com पर।
Welcome to a cheese spread made with pure milk. For chilly evenings. For peppery sundowners. For garlic afternoons. For tikka picnics. Welcome to Amul cheese spread. Spread the richness.
Welcome back. You're watching News 9. This is Morning Brief at 9. Let's bring you all the stories from around the world, beginning, of course, with remarks coming from U.S. President overnight. U.S. President Donald Trump says American forces have carried out what he described as powerful and deadly airstrikes against Islamic State in northwestern Nigeria, marking the first U.S. military action in the country under his current administration. According to President Trump, the strikes were conducted on Christmas Day after he warned ISIS-linked groups to stop the killing of Christians in Nigeria. Posting on Truth Social, the president said those warnings were ignored and that Washington responded with force. The U.S. Department of Defense confirmed that multiple ISIS fighters were killed in the operation, which it said was carried out at the request of Nigerian authorities. Pentagon officials provided few operational details but said the strikes targeted confirmed terrorist positions linked to Islamic State affiliates operating in the region. Pentagon Chief Pete Hegseth praised the mission, saying the U.S. military was ready to act swiftly and thanked the Nigerian government for its cooperation and support. The strikes come amid a renewed focus by the Trump administration on what it describes as the global persecution of Christians. Trump has repeatedly accused extremist groups in Nigeria of targeting Christian communities and has warned that the United States would not remain passive. Meanwhile, Ukrainian President Volodymyr Zelensky says peace efforts to end the war with Russia are gaining fresh momentum after what he described as a really good hour-long conversation with U.S. President Donald Trump's special envoy Steve Witkoff and Trump's son-in-law Jared Kushner. Now, speaking on Thursday, Zelensky said the talks focused on concrete ideas for bringing the war closer to an end, including possible formats for negotiations and even timelines. He said several new ideas were discussed that could help move the peace process forward in a more practical way. The conversation comes as President Trump intensifies his push to broker an end to the nearly 4-year-long conflict. Over recent weeks, diplomacy led by Witkoff and Kushner has gradually picked up pace, with Washington engaging Kyiv, Moscow and European partners in parallel discussions. While no breakthrough has been announced yet, the Ukrainian leader signaled optimism, saying the discussions showed a serious intent to explore workable solutions rather than symbolic diplomacy. And packaged food companies and fast food chains in the U.S. may soon face fresh pressure to reformulate their products as a new weight loss pill enters the American market. U.S. regulators have approved Novo Nordisk's oral version of Wegovy, a drug that suppresses appetite and helps patients lose weight, a move that could widely reshape eating habits and consumer demand. Now, the approval triggered a sell-off in food company stocks on Thursday as investors priced in the risk that fewer calories consumed could mean lower sales of snacks, sugary drinks and fast food. Take a look.
Packaged food makers and fast food chains could be forced to overhaul more of their products next year as a newly approved weight loss pill hits the market. That's according to food industry analysts who spoke to Reuters. The U.S. Food and Drug Administration approved Novo Nordisk's Wegovy GLP-1 pill on Monday, sending shares of food companies down on Tuesday. Eli Lilly's rival medication is expected to gain approval from regulators next year. Up until now, GLP-1 medications have only been available in injectable form. More Americans are expected to try the drugs as a pill rather than as a shot because the medication will be cheaper and many patients are hesitant to inject themselves. Food companies including ConAgra brands and Nestle are already dealing with shifts in consumer tastes toward higher protein and smaller portions due to the popularity of weight loss injections. Earlier this year, ConAgra started labeling some of its healthy choice frozen meals with high protein and fiber as, quote, GLP-1 friendly. Nestle, the world's biggest food company, has also introduced new frozen meals that cater specifically to GLP-1 users called Vital Pursuit. Some 40% of American adults are obese, U.S. government data shows, and around 12% of adults say they currently take GLP-1 drugs, according to a poll published last month by health policy research organization KFF.
And finally, China has sharply criticized the United States over its latest arms sale to Taiwan, warning that the move is accelerating the risk of conflict in the Taiwan Strait. Now, Beijing's defense ministry said the $11.1 billion U.S. weapons package, the largest ever approved for Taiwan, amounts to serious provocation and sends a dangerous signal to pro-independence forces on the island. China urged Washington to halt what it called wrong actions and stop undermining regional stability as tensions between Beijing, Taipei and Washington continue to rise. The US-Taiwan deal has once again exposed the deep fault lines in Washington's relations with China, with Taipei remaining one of the most sensitive and volatile flashpoints. And that's all we have for you on this edition of Morning Brief at 9, but news continues right here on Newsline. Thank you so much for watching, but do stay tuned.
Welcome to the new episode of Season 2 Malaysia.
Red Fort explosion. Let's get you all the updates. Following the blast, there is of course a South Indian connection of Dr. Shaheen Shahid. Because this is news of national import, that search operations are underway across the entire Al-Falah University campus. The blast killed 12 people. Prices, however, of Nandini ghee have been hiked. KMF has defended Nandini is the brand. I've been getting a lot of queries on my phone. What's for the people of Karnataka?